Hey everyone, welcome back to our channel. If you're new here, don't forget to hit that subscribe button and click the bell icon to stay updated with our latest videos. Today, we're diving into the world of Forex trading, specifically focusing on leverage, its benefits, and its risks. So, let's get started. Forex trading involves buying and selling currency pairs to profit from exchange rate movements. One of the key concepts in Forex trading is leverage. But what exactly is leverage? Simply put, leverage allows you to control a large position in the market with a relatively small amount of capital. It's like using borrowed money to amplify your trading potential. Let's break it down with an example. Imagine you have $1,000 in your trading account and you're using 10-1 leverage. This means you can control a position worth $10,000. If the market moves in your favor, your profits are multiplied. However, if the market moves against you, your losses are also magnified. So why do traders use leverage? Here are some key benefits. 1. Increased potential profits. With leverage, you can potentially earn higher returns from smaller market movements. 2. Access to larger trades. It allows traders with limited capital to access larger trading positions. 3. Diversification. Leverage enables traders to diversify their portfolios without needing large amounts of capital. While leverage can amplify profits, it can also magnify losses. Here are some risks you need to be aware of. 1. Increased losses. Just as profits are multiplied, so are losses. A small adverse market movement can wipe out your entire investment. 2. Margin calls. If your account balance falls below the required margin, you may receive a margin call. This means you need to deposit more funds or close positions to meet the margin requirements. 3. Emotional stress. High leverage can lead to increased emotional stress, impacting your decision-making process. It's crucial to understand these risks and manage your leverage wisely. So how can you use leverage responsibly? Here are some tips. 1. Start small. Begin with low leverage ratios until you become more experienced. 2. Use stop-loss orders. These can help limit your losses and protect your capital. 3. Educate yourself. Continuously learn about the market and risk management strategies. 4. Stay disciplined. Stick to your trading plan and avoid making impulsive decisions. Remember, leverage is a powerful tool, but with great power comes great responsibility. To wrap things up, leverage can be a game changer in Forex trading, offering both significant benefits and serious risks. By understanding how it works and using it wisely, you can enhance your trading experience and achieve your financial goals. If you found this video helpful, please give it a thumbs up, share it with your friends, and subscribe to our channel for more Forex trading insights. And as always, happy trading. Don't forget to follow us on social media for daily tips and updates. Links are in the description below. See you in the next video.